Welcome to Insights and Indicators. I'm Jason Thomas, Carlyle's head of global research and investment strategy. And in this podcast, I share our observations and opinions on the economic landscape, as well as insights from research being conducted by our team here at Carlyle. Today, we're discussing the outlook for Japan, and I'm joined by Kazuhiro Yamada, co-head of Carlyle Japan. This episode was recorded on July 10th, 2023, and the discussion reflects composite portfolio data and analysis of recent government reports that are accurate as of that date. Before we get to cause, just a brief word about what we've seen in the data over the past month. For the past 20 months, total business sales in the US economy has been at or above levels consistent with pre-pandemic estimates of the economy's productive capacity. The economy continues to grow despite those constraints, thanks in large part to companies using the past 20 months to really backfill capacity so as to accommodate those higher spending levels. And that's occurred really most notably through the 7 million net increase in US payrolls and the significant rebound in inventories over that period. But it's important to note that this really is a backfilling, because this is really standing up capacity that clearly wasn't there at the end of 2021, when prices in our index of components, parts, and other intermediate goods was rising at about a 60% annual rate. But there really is still no spare capacity, and that's what has the Fed uncomfortable. So really after a quarter where we saw a lot of implicit easing due to concerns about regional banks, I think the data have pushed the Fed into the direction of really having to adopt a much more hawkish posture. But at the same time, I think the lessons of the last 20 months are that we shouldn't underestimate the potential for further disinflationary capacity builds. And as we saw most notably in the second quarter with a big surge in multifamily construction activity. But even if the Fed is pushed into a more hawkish direction, one central bank that has not felt impelled to tighten policy in any way has been the Bank of Japan. So with that, I want to first welcome Yamada-san to the podcast and just start the conversation more generally. What are you seeing in Japan right now? What excites you?
Jason, thank you for having me. I am Yamada, co-head of Japan, and I'm quite excited at this current phenomena. First is Japan PE market is relatively small, but roughly 1/20th of US market. But finally, Japan PE market is opening. And there's three main reasons why. One is the lots of succession opportunity. Based on data, roughly 1.5 million number of succession company has facing a serious succession issue and actually no successor. And based on our data, 1% of those are going to be our target. That means the 15,000 company going to come to the PE market for next 10 years plus. The second is a corporate governance code. Japanese government implemented a stewardship code and the corporate governance code in 2014 and 2015. After that, Japan PE market going to be tripled. And that kind of a pace or phenomena has been accelerated. So it means the Japanese CEO is more pressure from outside global investor and also activists. And also they have 92% of those listed company has more than 1/3 of independent board of directors. That means lots of rational discussion how we can increasing the shareholders value and how we can increasing share price and how we can increasing income. As a result, CEO need to consider to focus on a core business and just starting a spin-off a non-core business. Hitachi, Toshiba, Panasonic, you see several large deals, corporate spin-off deals, but it's a tip of iceberg. So significant opportunity come from corporate carve-out, particularly non-core business. It seems like early 80s. The third is Tokyo Stock Exchange recently make reform, particularly for reviewing status requirement for the listing status. And that's also push a lot of pressure on the CEO. Particularly 43% of Japanese listed company traded at below 1 PBR. It's quite undermanaged situation. Tokyo Stock Exchange required to demonstrate or shows an actual action plan to achieve 1 PBR. And that's quite another pressure to a CEO. Those are three combinations, the phenomena.
So this is really relatively new. You have the stewardship code, the governance code that both took effect at the end of 2014, early 2015. Are you surprised by the pace of change with the corporate governance reforms? Or is this what you expected when Prime Minister Abe embarked on that third arrow, the structural reforms, the increasing in productivity of capital, increasing productivity of labor? How do you think the economy is doing today relative to where it set off again at the end of 2014, 2015?
Yeah, current phenomena is, honestly speaking, unexpected. It's a kind of a new initiative, and most of our CEOs originally expected not consider to change their management style. But after implement the stewardship code, corporate governance code, their attitude changed because of lots of pressure from outside and inside I code. So their mindset is a total change. Before implementation code, risk money actually still provided by banks, mega city banks. It's a quite a different phenomena, structure. US, other Western market is a risk money provided market, but Japan is a risk money provided in banks. So as you know, their expected return is quite low compared with the market. That's the reason why lots of unprofitable business is still alive. And CEO does not need to take immediate action, the severe action to spin off a non-core business and set up the business. But now it's totally changed. It's a similar kind of a mindset of Western CEO. And also current CEO has a great experience with overseas business and also MBA holders. So that's create a significant phenomena. And they are now focused on the more core business and how we grow the overseas market. That has a new kind of phenomena. And definitely, still Japanese companies' margin is roughly 700, 800 basis point low EBITDA compared with the Western companies. But now is gradually catching up.
You mentioned the low return expectations of the banking sector, the very low interest rate loans that have been charged in the past to many of these large businesses. So that does bring us to the BOJ and expectations for the exchange rate. Obviously, there was market expectations that Governor Ueda would scale back yield curve control, essentially allow longer term Japanese government bond yields to rise to levels that were more commensurate with the rise in bond yields in the rest of the world. That has not happened. The yen has suffered somewhat as a result, going to 144 now 142. What's your outlook on the exchange rate and Bank of Japan policy?
Yeah, just if I know, I put all money into forex. But majority of consensus is Mr. Ueda will continue to easing policy and maybe keeping a current curve control. But different from Mr. Kuroda is he's academician and he's considered maybe a current easing policy and the zero interest policy is not sustainable. I think most of basic consensus is if there is any definite or more stable inflation is realized or seen in the market, he will not changing easing monetary policy, but he will release maybe yield control policy. And that means the current long-term rate going to be under 50 basis point, but maybe possibly up to 1% or a little bit less than 1%. That's market consensus. That means the US interest rate is still one time, two time up, but going to be close to the ceiling. And Japanese interest rate going to be up. And as a result, interest spread going to be squeezed. So it means the maybe yen going to be appreciated. I don't know what a currency rate is appropriate, but many people say is a dollar to 120, 125 going to be maybe a reasonable range for the long term. That's current market consensus.
Yeah, that's consistent with our views too. Something around 120, over a 3 to 5 year window, with of course a lot of uncertainty in the interim. Kaz, thank you so much for taking the time to join me and for a great conversation.
Thank you. My pleasure.
On behalf of the team here at Carlisle, thank you for listening, and I hope you'll join us again for our next episode of Insights and Indicators.